One of the key pieces here that I want everybody to really listen to, if you don't get anything else first, get this for the framework for the rest of the conversation. The infinite banking concept that Nelson wrote about in Becoming Your Own Banker can be done through any product. It can be done through a checking account. It can be done through a savings account. It can be done through equity in a home. It can be done through farming equipment. It can be done through a HELOC. It just so happens that dividend-paying whole life insurance with mutual companies that have been around and consistent for 100 plus years is the best environment to practice taking over the banking function for. So that ought to eliminate everybody's worry of, oh, you're trying to sell me insurance. Because if we could do this through another product and get as many results positively that we do through the product of whole life insurance, then that's what we would be talking about.
In our world, premium is a privilege. And when you understand that you are limited to how much death benefit you can capture, how much guaranteed insurability you can capture, it turns into a game of, instead of I need to have life insurance, it's I need to have that protection in place so that I can plan better for the future. And so that I can guarantee that at a minimum, there's an amount of money that's going to be flowing through my life for the next 30, 40 years. At a minimum, I can guarantee that that money stays in my family. Now, that's just from the death benefit.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome to Cashflow Legendz. Nate and I are excited to be here. Brock is spending quality time with family. As we record this, we're going into the Thanksgiving time of year. And Nate, I know we're going to be talking about Nelson and becoming your own banker. And in this section, we're going to spend time talking about the equipment financing example. But I want to start with just in regard to the things that we've learned over the last 8 years plus, from the first time we read Becoming Your Own Banker, when we became enthralled with what is this really and does it make sense? Maybe one or two things that you're super duper grateful for in the theme of Thanksgiving and all the blessings the Lord has allowed us to be a part of.
I think one thing that's really fun to kind of zoom out and see is, and I say this very humbly, and I think you would probably echo this. As we have continued to lean in and grow, the impact that we've been able to make on the people around us, and we see how, because of our growth, it is kind of permeated into our circles to where they're wanting to get to those, like it's just an encouragement to the people around us that they want to grow too. And the old saying goes, a rising tide lifts all boats, kind of thing. And that's definitely one of the things I'm grateful for, not only in friends and that type of circle, but also in my family. And I see, just from a faith perspective, as I would say this year, again, I say this very humbly, I've gotten closer to the Lord this year than I've ever been. And I see how my kids are seeking after those things as well, and seeing that how important their own personal faith is and their relationship with the Lord. And it's just created great conversations with my kids, with my wife, and just grateful to be in a really good place across the board right now.
Yeah, Nate, I would definitely echo that. And it's something that I think you and I can add, and I can say for us both, is that gratitude when it's been challenging and being able to sometimes get a glimpse of how those very uncomfortable, nauseating, challenging moments over the last several years in different areas of life, faith, family, fitness, finances, whatever it is. It reminds me of, considering it all joy in scripture, and just the blessing it is to be challenged on this earth, because we know already eternally where we're going, and we want as many people to know that as possible and have an opportunity to go with us. So humbling to just be able to talk about something that we enjoy talking about anyway.
Yeah.
Um,
And
to
and I've shared a little bit of this before, but also going into this year, basically, I mean, at not really like pouring into people and everything like that, but not having sort of an intentional discipleship plan for people around me that needed that. And so this year, I got several men that I meet with on a regular basis each week that I get the opportunity to pour into, and had the chance to do that this morning with one of them.
Yeah, it's side note. This is actually for anybody listening. This has come up many times here lately. Nate and I have talked about it behind closed doors, but also in public. We all need a Paul, a Barnabas, and a Timothy in our life. And so Nate and I have had the conversation for me that I'm grateful I can be around people that help me realize that, hey, I may be having a lot of Barnabases and Timothys, but I need a Paul, and those kind of things. So awareness is a key piece to progress and growth. Because if we're not aware, then as Nelson said, we don't know what the problem is.
Oh yeah, awareness is a great segue into what we're talking about today.
Yep. So Nate, we're talking about equipment financing. If you open up equipment financing and you go from page 51 to 63, it could be a little overwhelming because you see a lot of charts, a lot of graphs, illustrations. I want to emphasize something so that this is the first time you ever listened to or watched us. Nelson is on record saying to people that knew Nelson very well, if he would have rewritten Becoming Your Own Banker, he'd have left the illustrations out. Because people get so caught up in the numbers that they try to think about becoming your own banker from a numbers perspective instead of a behavior perspective first. Nelson says very clearly, if you go back and you read the first line in the book, that this is a workbook for a 10-hour course. This is not a book you read once and you arrive and figure it out. The first half of the book's about behavior. So there's a reason he said he'd have left it out. And I was reminded at a Nelson Nash Coaching Academy recently, when Nelson wrote Becoming Your Own Banker, and they did the final version in 2008, I think, the 5th edition.
Yes. Well, the first edition was written in 2000, and then there were 5 editions after that.
Yep. Thank you for correcting me on that. The key piece of all that is that Nelson was trying to meet us where we are on our current thinking inside the financial system that we are used to. That is a very important piece to remember. So a lot of times when he says things in Becoming Your Own Banker, he's trying to connect with your present thinking, not your new future thinking of what it means to become your own banker. And that was a very important reminder for me because, Nate, you and I have had the privilege to do this for 8 years. And Brock's been around it his whole life. And so a lot of times we go to like the 400 level thought processes when we really need to get to ground level. So today in equipment financing, we're not going to break down any of the charts. We're not going to overthink anything. We're going to go through some real high level, big truths related to how money flows, financing, what it means to finance. And Nate's going to lead us into kind of the key focus today. And then we'll kind of do a little bit more of a Q&A type back and forth with some key points.
Yeah, and there's a big piece to all of this, and this is the key principle in understanding this whole process of what this looks like. And I've heard it hundreds of times, and I've probably said it thousands of times, and it never gets old. And it's, you finance everything you buy. And some of y'all are going, if I'm paying cash, I'm not financing. You are, you just don't realize it. So either you pay interest to someone else, or you give up the interest that money could have earned if it would have been in a better environment. And the better environment is what we talk about and what we teach all the time. But the flip side of that, or the other side of that coin, is you're always making payments to someone. You're either making payments to the bank when you're financing, or you're making payments to yourself when you're paying cash for our future purchase or future investment or whatever that might be. So money has to flow somewhere no matter what. And that's why Nelson Nash's equipment finance example was so powerful. It's not about trucks or numbers like we talked about earlier. It's because it shows what happens when you stop letting the financing companies profit off of your life and you start running and controlling the banking function yourself. So that's what we're going to be talking about today and kind of what that looks like in real life.
Nate, I'm going to put a bow on exactly what you just said. Every dollar that comes into our life has a financing cost somewhere. So we have to get over this idea that I can bypass or miss out on the rules of the game that cost me somewhere. Cash, traditional financing, mortgages. So one of the key pieces here that I want everybody to really listen to, if you don't get anything else first, get this for the framework for the rest of the conversation. The infinite banking concept that Nelson wrote about in Becoming Your Own Banker can be done through any product. It can be done through a checking account. It can be done through a savings account. It can be done through equity in a home. It can be done through farming equipment. It can be done through a HELOC. It just so happens that dividend paying whole life insurance with mutual companies that have been around and consistent for 100 plus years is the best environment to practice taking over the banking function through. So that ought to eliminate everybody's worry of, oh, you're trying to sell me insurance. Because if we could do this through another product and get as many results positively that we do through the product of whole life insurance, then that's what we would be talking about. You just can't. So that's a key piece first, Nate.
Well, and then, so many of the naysayers out there, and you and I used to be naysayers,
Absolutely.
would say, oh, premium is a cost. But the ability to capitalize is not a burden. It is an advantage over everyone else. Premium, in our world, premium is a privilege. And when you understand that you are limited to how much death benefit you can capture, how much guaranteed insurability you can capture, it turns into a game of, instead of I need to have life insurance, it's I need to have that protection in place so that I can plan better for the future. And so that I can guarantee that at a minimum, there's an amount of money that's going to be flowing through my life for the next 30, 40 years. At a minimum, I can guarantee that that money stays in my family. Now, that's just from the death benefit piece. What we also get to do simultaneously is build and grow into that number over time with certainty. And that's where it becomes really powerful. But none of that happens without capitalization.
Yeah. So Nate's bringing up a great point that capitalization isn't a burden. So let me reframe it and separate from money for a minute. Nate and I have known each other for the majority of our life. We reconnected about 8, 9 years ago, 7, 8 years ago, 8, 9 years ago, after, life and college and marriage and all that. The reason that we're standing here today, praise the Lord, is because we both made a choice to capitalize in our relationship through time, energy, effort, accountability, conversations, miles traveled together, booking arrangements to go invest in ourselves with people that knew more than we did in the areas that we wanted to learn more. That's all capitalization is. And here's the key thing, Nate. We are capitalizing somebody's system. That's the first piece we have to understand. So Nelson brings up this great point that we complain about premiums the same way grocers, people who own a grocery store, complain about stocking shelves. But if you and I said more premiums leads to more profitability in your life, then that brings you to a cross point or a crossroads of your thinking. Because premiums can't be bad and also bring more value to your life simultaneously. One has to be true over the other.
Yeah. Jocko likes to say discipline equals freedom. Well, premium also equals freedom.
Yeah, and Nelson was often quoted as saying some version of peanuts in, peanuts out. And all that really means is Nate, back to our example of our capitalization on our friendship and business partnership and all the things. If Nate and I only talk once a year for 30 minutes, the impact and the value of how we grow together is going to be so minuscule and probably a net negative compared to if we talk 30 minutes a day or every other day. That's what capitalization is. It's relevant for your kids. It's relevant for your marriage. It's relevant for your walk with the Lord. It's deciding where your energy and discipline is going to go. So that's the first piece, is these are not wild concepts. These are foundational truths that if something matters to me, I'm going to put time, energy, and effort into it. And so when you hear people in this world say, related to becoming your own banker, and you hear us say, we can't wait to pay premium, that's not some kind of just sales pitch. Because remember, Nate and I started with thinking premium was bad. So we've been on that journey of premium is bad to premium is the greatest privilege financially related to controlling money flow that we can have. So think about it this way. We aren't ever complaining when we stock inventory in someone else's business. When I walk down to Chase Bank after having coffee at Joe Pine and I make a deposit into Chase Bank, I don't ever complain about stocking their shelves, because that's really what we're doing. We're putting inventory, a deposit into their bank so they can go take over the banking function and be profitable. So that's a key piece. We have to understand what's going on and understand that the banking process is going on in our life and we are paying finance costs wherever. Nate, I think it's good to zoom out one more time on the cash example. Cash is a great discipline because you've already exhibited the ability to save. And that's a key piece. The ability to save is a key piece no matter what we're doing. That's how wealth is created. We can create a gap between our income and our expenses over time, and that gap can get bigger. Then it has to do with where the money goes, the environment. Okay. So if we understand that, now let's talk about at a high level. Nelson brings up this example of the 30-year-old logger in the equipment financing example, and he's using 18-wheelers and the known cost tied to financing and all the things that are going on in that. But I want to emphasize, Nate, and touch on this. It could be anything. You go back to the beginning. This is about how one controls the banking function in their life. So if you are a rancher, it could be tractors. It could be large combines. If you are a builder, it could be large purchases for lumber. It doesn't matter what the thing is, Nate. So I think that's important. He just was using an example of financing and costs, and this was actually somebody that was related to him, if I remember correctly.
I think it was his nephew or something like that.
I think so.
Yeah.
Yeah.
Yeah. So essentially, this example, he's building this system for 4 years, capitalizing for 4 years, and so the cash value and the premiums are paid nearly identical in this illustration, that this first illustration, by year 5. And so when you see those things, that what you discover is, and I got to be very careful about how I say this because there's some nuance to understanding, but in a way, the policy becomes self-sustaining from that point forward. But in this example, he needs $52,000 for a truck, and he doesn't go to the finance company. Instead, because he's been capitalizing and preparing for future capitalization for himself, he goes to his policy. And that's where it really starts to unfold and becomes really powerful, because what this guy figures out is that becoming your own banker is no longer a theory, because now he's put it into practice. So now it has become real in his life. And we talk about that sometimes with people who are capitalizing their policy. Richard Canfield says this often, like, you won't fully understand this until you take your first policy loan. And I remember one of the interviews we did was Justin Samovan, um, and he said the same thing. Like, I didn't fully get it until I took my first policy loan.
Yeah. You don't fully understand. And I keep coming back to this coin example because it just clicks in my brain, Nate. There always has to be two sides to something. There's a front side of paper, a back side of paper. I think I got this from Myron Golden, and I really like it. There's a head side of a coin and a tail side of the coin. Let's just say the head side is paying cash in the traditional financial model that we've all been taught. And then the tail side is going and getting a loan from somebody, whether it be financing company, mortgage company, whatever. But there's also an edge of that coin that makes up a percentage of that coin that connects those two sides. And that's where all the wealth is created by the companies that are controlling that process in our life. That's where the control and the certainty is created. And we can take that over with Nelson's principles of think long range, don't be afraid to capitalize, don't steal the peas, which is don't take from your inventory without having a plan to give it back because you're already giving payments back to somebody, and then rethinking our thinking and not doing business with banks. So,
It's funny. This reminds me. This happened yesterday. I was actually having a conversation with a banker that I'd met, and so we start talking about this stuff, and he was really surprised when I told him that I had several bankers who were actually members or clients of ours.
mhm.
And I said it's kind of comical, but it was about 3 months ago or so, something like that, that I was meeting with a banker, um, and he works for one of the big banks out there, and you would easily know the name if I said it. Um, He'd been a banker for like 25 years, and by the end of our conversation, he said, "I've been doing this like 20, 25 years, and I feel like you know more about banking than I do." He's like,
Mm,
that's weird to me. That doesn't make sense. And I was like, well, thank you for the compliment. Um,
mhm.
but as you said earlier, we have capitalized on our learning, our understanding. We've leaned in. I wouldn't necessarily say that it's an obsession, but it is a passion of ours for sure.
Yeah, Nate, and it brings us right back to what Nelson said all the time. Once we know what the problem is, we'll know what to do, or the solution becomes very clear. So we first have to realize that none of this is magic, and none of this is anything other than behavior in a product, dividend paying whole life insurance with a mutual company that allows you to do what you are already doing more efficiently if you can realize Nelson's principles were sound and begin implementing them in your life instead of letting someone else control them in your life. So, at a very high level, let's get into a high level of numbers. In the financing example, he talks about financing a truck over 4 years for $52,600. So he has a financing, a loan. We've all probably financed or saved up money to pay cash. You're still financing either way. It ends up costing him in this example, and you can go to your specific books, anybody listening, look at anything you've ever financed. And it ends up costing him 72,000 and some change total. That means over 19,000 went straight out the door to interest. Nate, who did the interest go to?
Those good old financial institutions.
That's right. That's right. And this guy's been running a business where he's been he's been doing this for a few years every time he needs to finance something. So there's a key piece here, and I'm going to pass it over to you, Nate.
Yeah.
That is the silent wealth transfer. Say it again. This is the example of the silent wealth transfer that destroys, cripples, or limits most families and businesses.
Is it common for people to save money at one bank and borrow from that same bank?
Yeah,
It is common,
absolutely.
right?
It's very
Yeah.
common.
Yeah, this is where my savings is, and if I need to go get a loan for a vehicle, then I'll talk to my bank, and they already know me because I already have an account there, and so it makes it really easy, whatever. But when you really think about it, that money that you're socking away in savings, they're paying you maybe 1 or 2% interest on. and then they're loaning it back to you at a multiple of that interest that they're paying you.
Mm-hmm.
They might pay you 1 or 2% on it, and they might loan it back to you at 10%. Now, that is not an 8% spread, by the way.
Mm-hmm.
You got to do the math on that to understand what's really happening there. So that's why controlling the banking function becomes so powerful, is because we're no longer playing this, this illusion game with the bank where we feel like we're winning, but we're actually going backwards.
Yep. And I want to touch on a point Nate made earlier, talking to the banker that he mentioned. I think often the reason that comment can come up when we're visiting with people who are in the banking industry is they're typically not in an ownership shareholder position. They are more boots on the ground, seeing the day-to-day lending aspects, and they don't fully know the problem yet. And I'm not saying this is an ugly thing. I'm saying it as just a fact that I visited with RVPs of banks who don't know what is occurring in the banking process. They don't know how banks are remaining profitable at such a high level, with the example Nate just gave, because they don't need to know that, Nate. Why would they need to know that if they're not an owner and a shareholder in the bank? So this is what Nelson was trying to get us to realize. Most people don't realize that when we take on a monthly payment, it's not just, in this example, a $1,500 a month payment going to a truck. What it's costing us is the ability to ever get ahead. And that's the margin right there. If I am taking over the banking function, I can eventually get ahead of all those, as Nelson called, headwinds that are siphoning out money out of our life that we don't see, or I will always be behind the headwind.
Yeah, and somebody will often say, well, if I was saving up that money, why wouldn't I just go pay cash?
Mm-hmm.
You can do that. But the reality is, every time we pay cash, our account balance goes to zero, and now we transfer that to someone else. So anytime we're paying cash, we are losing the time and momentum that it took to create those dollars to begin with. And the beauty of the infinite banking concept and understanding how you can borrow against your cash value in your policy is I have the ability to keep constant pressure on my dollars to grow over time. You can bring it down to the you and me level to make it more tangible for people. That savings account that we were talking about earlier. Well, there's a product at the bank called a certificate of deposit, a CD.
Mm-hmm.
And so people can put money into a CD with the bank and lock in whatever interest or whatever. And when you do that, oftentimes the bank will allow you to take a loan against that CD because you've got that money secured with them. So they already have your money. So it's a very low risk loan for them. So they will allow you to borrow against the CD that you now are holding with them. You can't do that in a savings account. You have to put it into an actual product that locks it up for a certain period of time or whatever. But there is a scenario that we talk about often. Typically what's going to happen in a CD example is they're going to pay me a certain amount of interest. Let's say in today's times, it's maybe 5%. Okay. And then if I requested a loan from the bank and using my CD as collateral, usually they're going to charge maybe 1.5% to 2% over and above what they're paying me on the CD because it is a low risk loan for them. So they're making a little bit of a spread there. But what's powerful about that process is you keep the ability on those dollars in the CD to grow uninterrupted while you're using the insurance company's money. So if you look at an amortization schedule in a scenario like that, let's out 48 months as an example, what you'll find out is, just running the numbers, is the CD by the end of the 48 months, the CD is worth more than what you paid in total to pay off that 48-month loan.
And Nate, what you're really just describing is not magic. It's just math. That's all it is. The key piece is the behavior piece, and then we first have to realize there's a problem. And that is that someone else is controlling the banking function, the financing terms, the financing process, where our money resides, and benefiting from it. And that is the key piece that we first have to recognize, that there is a problem, in the sense that it is not a system that's been created for us. Now, I always like to say this. You can't get rid of banks, traditionally speaking, but you can either use the bank to control the banking function, that is an entity that you pass through, or you will be used by the bank. And that's a very big difference, that once you see the problem, you can't unsee it.
Yeah, somebody's always going to be the bank. It might as well be you.
That's right. So there's another piece, Nate, in there. Let's tie into that. I really like. If you're the owner of the system, the banking system, and remember, the banking system is as big as you can make it based off of your creativity, your imagination, all the things tied to insurance, insurability, human life value. And Nelson talks a ton about that in Becoming Your Own Banker. Helps you get real clear on that in the second half of the book. What does that really look like? But if you're the owner of a banking system, wouldn't you want to be the borrower too? Why would I ever come to Nate's bank to borrow his money to give him profit if I could come to my banking system through whole life insurance and premiums paid to control my cash flow? Key piece, Nate. When I set up repayment terms to be an honest banker and not steal the peace to my policy loan, just like he did for his equipment financing example, do they tell me at the insurance company what I have to pay and when?
The insurance company? No,
Yeah.
you get to control the terms.
But if we're going to be a good banker and think like a banker, I want to repay myself or repay my financing I've given from my policies, because I get to use it again.
Absolutely. When you can think about this from our perspective. We have 7 policies that we own inside of our business.
Mm-hmm.
And when we have a personal need in our life, you and I, we look at our business policies and we say, hey, could our business finance this for us?
Yep.
You know,
Let's add to that, Nate, a personal need that we were going to pay for or finance or need capital for anyway.
Yep.
That doesn't change. That's going to be around till the day we die, and that's going to be to the next generation and the next generation. That's a key piece to understand.
And every time we borrow, we set up an amortization schedule that goes back to the business. It gets repaid. But now we're no longer interrupting our revenue. You know,
Good.
Those 7 policies, if you read Becoming Your Own Banker, Nelson tries to get this point across. Every policy represents a little business that you own. It's a banking business. So now we have 7 little banking businesses wrapped up inside of our own business.
And this gets asked a lot. This will help people go, well, why do you need 7? If we'd have had all the capital to pay all the premiums we pay year one, and we had enough insurability to get it, we'd have just had one policy. But that's not how life works. It's not, oh, I got all this money, let me dump it in. It's all tied to the math of insurance companies that has kept them around and sound and profitable for 100+ years consecutively.
And you'll expand your system as you expand your learning.
Boom. That's good, Nate. Hey, on that note, Nate, I was reading a great book, Willpower Doesn't Work. Me and you were reading through it, and it makes this point in here. It says that they have consistently proven that every time we invest $10 in our own learning, buying a book and reading it, discussing it, and applying it to the best of our current knowledge, there's almost always a 10x return. And that's what I love about what we do when we're introducing this to people and they are interested in learning more. They still are making the choice to invest in their own learning and thinking and application. Because this will not work. And people will ask all the time, what's the downside of this? Sounds too good to be true. It's human behavior and discipline.
Yeah. The downside is if you're a short-term thinker, it'll frustrate you. But if you can think long-term, it is incredibly powerful.
Here's the cool thing, Nate. Thinking long term, what does that really mean? If you're already a long range thinker and thinking generationally, you're already in the driver's seat.
Yeah.
So when we say thinking long term, let's really nail it down a little bit. If you can't think beyond tomorrow, then there's a lot of work to do. If you want a quick fix immediately, then there's a lot of work to do in your thinking. But if you start being willing to do that, and Nate and I are talking to ourselves, okay, I want to be clear on that. We're always being reminded of how sound Nelson's principles were when we try to move too fast instead of thinking long range and delaying gratification and creating opportunities to implement those things. And you're reminded how the system, one of our mentors says, banks, Wall Street, and IRS, they created the majority of the rules of the game of how money works. They did not create those rules for you and I to win, Nate, at all.
Yeah, and if there was a calculator that we could punch in numbers to calculate our opportunity cost on decisions we make, it would probably, our behavior would probably change just a little bit. But the reality is opportunity cost doesn't show up on our budget in the same way that other decisions we make does, in the immediate. But if you understand opportunity cost and you understand the ability to scoop up dollars that are leaking out of your life right now that you can't even calculate, that is the ability to think long term. And when you realize that that's possible, to be able to reclaim those leaks, it doesn't even matter what those numbers are. It just gets really exciting.
Yep.
Because nobody wants to show up and say, I'm ready to lose this game. If you're playing the game, you want to win.
Yep.
Well, if you know that there are things that are causing you to lose, what are you going to do differently?
Yeah, Nate, I think that's a great opportunity to say right there what we know in our own life, what we finding having the privilege to visit with people who are opening up to, hey, this isn't working, or I think it could work better, is the acknowledgement that there's a pain point somewhere. And sometimes we don't even know fully what it is. We just feel it through stress, through worry, through doubt, through uncertainty. And so really, we get asked all the time, who's our ideal client? Someone who is willing to go, I am my best present day thinking, but I want to grow upon that or expand that. And maybe there's something out there I just don't know, which brings you right back to Nelson's first half of the book and not being killed by arrival syndrome. There's always something new to learn.
Yeah, and there's something really powerful about opportunity cost. Once you discover like these headwinds and these tailwinds that Nelson talks about and what that really means, in this example, what Nelson is really demonstrating is there's a little bit of magic that starts to occur in this process. And I don't mean like I don't use the word magic as pie in the sky. I'm just like there's something that's very powerful that takes place here where you start to understand that every truck in this example that you finance through your system going forward is going to increase your wealth over time. Because these are expenses that were already going to be incurred. But now, in a way, you have the ability to earn interest on your expenses, not just your assets.
Yeah. So let's say it a different way, Nate, just so we can be sure. That $19,000 that went to the financing company and interest, you have an opportunity to not give that to them, which means you have the opportunity to keep it flowing in your system, to keep control of it. So here's this isn't even on our list to talk about, but here's a key piece. If your mind immediately goes to, well, doesn't the insurance company that we are borrowing against our cash value charge an interest rate? It absolutely does. And we're an owner of that company and its profitability because it is a mutual company where we participate in its growth as whole life insurance owners. back to Nate's point at the very beginning, we finance everything we buy. All capital has a cost. So the real question is not what do they charge us as an interest rate to use their money at the insurance company that we pay premiums to. The real question is am I benefiting from that in any way compared to what I've been doing?
Yeah,
And the answer is yeah.
and people need to understand also that you're only being charged interest for the amount that you are using at the time. So the interest is being adjusted as those repayments are being made. Almost kind of like a credit card a little bit. You know, you get a credit card balance and then you pay down that balance. Well, you're not being charged interest on the original balance. Now it's been adjusted, you know, based off of your new principal.
The difference is we aren't the owner of American Express.
Right.
We don't participate in the profitability.
And on top of that, if you or whatever your line of credit was with American Express, let's say you had a $10,000 line of credit with American Express, if we're relating it to IBC, then in that situation, inside of our policy, we would be earning interest on that $10,000, even as we were using it somewhere else simultaneously in our life.
Let's also add this key piece that business owners seem to get real quick is that when we borrow against our cash value at the policy to go put it to work in financing or whatever we're going to use it for, it's a simple interest loan. It's not amortized, which means the better we are at resending payments back, which is just money we can use again, the more capital we control. This is one of the ways that 19 grand in interest starts shifting in his direction, is because it's a more favorable loan. And business owners get that. They're like, whoa, hold on. They're like, I've been talking to one this past week or two. He's like, if I get a large sell on a job and I replenish my system and I can't quite expand it yet with new premiums, they're not going to charge me interest on that money because it's not outstanding anymore. I said, you got it. He's like, there's nowhere else I can do that and be the owner of the company. I said, exactly.
Yeah,
this is why. Go ahead, Nick.
Well, there's a cost of capital in everything that we do, and what the ability to borrow against our money and keep constant pressure on it does is it closes that gap on the cost of capital. And as you continue to be a good banker, you get on the positive side of the interest altogether.
Yes. And that's where Nelson's little Nelson-isms become more and more true the more we get to do this. Once we know what the problem is, we'll know what to do. Once we know what's really going on, a lot of the noise doesn't even catch our attention anymore. And Nate and I are at the front of the line on getting caught by shiny object syndrome. Okay, it happens.
We're getting better.
We're getting better. But it's this first awareness.
There was a time where we were really struggling with that.
Yes.
But
yes.
Yeah, we've gotten a lot better. Thank the Lord.
Well, and the key piece there is that this process is about movement and growth. So, if you want to equate it to getting stronger, your muscles don't get stronger from going to the gym once. They get stronger through consistency of stress and recovery, which equals growth. Stress and recovery, which equals growth, just like a muscle. One of the things I find that's the hardest for a non-business owner to understand is that their personal economy in their house, if they're not a business owner, it's still a business. There's still money coming in, money going out. There's still profit. There's still loss. There's still headwinds. There's an opportunity to take over and make them tailwinds. And when families start seeing that, they go, oh, at a high, simple level, that money was leaving our life forever, which said one way is somebody else's passive income. And we are getting it to come back into our life and keep control of it. That's it. It's that simple. And then when people start seeing that, as Richard says, when you get to the point where you're excited about paying your second or third year premium, it's because the connection has been made that I can take more of those payments that were leaving and control them and getting them coming back to our family, our priorities, our goals by the more premium I pay. There's a direct correlation there.
Yeah. And we don't send policy loans out into our life without a plan. We deploy those with a purpose, because the analogy that I've used in the past is like as we are building up cash value in our policy, we're sort of training up an army to be prepared to go out into the battle of life for us and fight for us. And as we repay policy loans and we add new PUAs, new paid up additions to the cash value of our policy, we just continue to train up more armies to go out and fight. And the more armies that we can train up to go fight for us, the better chance we have of winning this thing.
Yeah, if you buy Becoming Your Own Banker and start reading it from our website or wherever, you're going to see a gopher analogy around this point, which is similar to the army that Nate's talking about, is that the insurance company is full of gophers, people borrowing money. Okay. When you repay your loan, you enable the company to send your gopher back out to do the work for you. Repayment powers the entire system. So your repayments don't disappear. Okay. Think about that. Your repayments don't disappear. They put your financial employees back to work, or your gophers. So dollars are either working for us or for someone else. There's no in between. It is either working for us or working for someone else. So Nate, you say this often. I think we got this from our mentor, Trent. And I'm putting you on the spot here. So if you don't remember, I'm sorry. But you say often, we're not against qualified plans and we're not against all these things we're told to do. But we are against, what do you normally say there?
People blindly putting money into things that they don't understand.
That's right.
And most people don't understand what they're doing with their money.
And I'll add a level to that, Nate. Here's an example that comes up often. Somebody will go through our process, read Becoming Your Own Banker, really dive in and have a lot of great questions. And then they'll start trying to compare it to something that is as similar as what they think this is. So a lot of times the 401k comes up. Okay. And we're not knocking 401ks. If you've got a gigantic 401k, we can show you how dividend paying whole life insurance can help whatever you pull off of that in your, your drawdown years be more stable. But I always ask genuinely, hey, did you do this much research and ask this many questions when you automatically opted into your 401k at work? Do you know all the things that you're asking me about this product? Did you do the same thing to the 401k? And this is not me being or you being ugly. This is to bring the point to the forefront that we do all these things with our money that have built-in savings that we believe is going to get us to where we need to go, but we don't know how, with who, why, when, or where. And so it brings us to the precipice of the reality that the words put together, dividend paying whole life insurance, are really the biggest hurdle for most people to get over. Because we have a belief and an idea of what dividend paying whole life insurance is that has been butchered, to say the least, in the open market. You could go, because Nate, if you and I were standing on the corner of a major bank giving examples of all the benefits of the new product we're going to start at that bank, and we listed all the characteristics of whole life insurance, but we didn't say whole life insurance, there would be a line miles long to start putting their money in that product.
Yeah. Well, and especially in financial products, I think about like you look at reviews online for different things, and you'll see this review, and it's like, oh, this was the greatest product ever. Like I'm just thinking about like going on Amazon and looking at reviews of like, this is the time of year where people shop on Amazon a lot for Christmas and all that. So you read a review and you're like, oh, this is the greatest thing ever. And then you read another review, like, this is the worst thing ever. And the reality is typically the negative experience is going to be magnified with a megaphone over the positive experience. Yep. And so the negative experience of whole life insurance has been magnified with a megaphone and amplified through talking heads and everything like that, because there is a great benefit to the mainstream narrative of buying term and investing the difference for Wall Street.
Yeah, that's a great point, Nate. And if I were to frame up to tidy up what all we've talked about, we're not ever telling you what to do. Brock is not ever going to tell you what to do. We're going to ask, why do you do that? And do you understand if it's creating what you want to accomplish? The number of times that Nate and I asked some version of, what interests you enough to have this conversation? It almost always, when we dig down to the root of it, comes down to this reality of, I want to control my time more. And I recognize that the more I understand money, the better I understand it, the more time I can control. Almost always, to do the things that matter to them.
Well, and also, and to what you just said, what we often experience is someone coming to this because they've finally experienced a pain point that has caused them to do something different. So some people might be listening to this who haven't experienced that pain point yet, but I can promise you it's coming. If you're not properly planning from the perspective of, I want to reduce my probability of failure to as close to zero as possible.
And Nate, we say it this way also. If you've experienced the pain points in some capacity, then when we say things like, we want your plan to work when things don't go according to plan, people are like, oh, I get that, if they've already experienced some severe pain.
Yeah.
If they haven't yet, which we were on that side at one point too, if they haven't yet, they go, my plan's going just fine. I'm not experiencing pain points. And we're forgetting this reality that every day we have a checklist. Never do we get it all done. Never does the day go according to plan. Never does the day just go perfect where we hit box A, B, C, D, E, F, G with no hesitation. And so we know statistically wealth is impacted most, or our ability to create wealth, by health concerns and litigation. Those are the two things that impact wealth the most. And it doesn't matter if you're a multi-millionaire, billionaire, or you're only making $100,000 a year. The same thing can happen with your health or litigation. Get in a car wreck, get sued, lose your ability to be healthy enough to qualify for protection, those kind of things. So key piece to tidy up, Nate. This isn't about getting a policy, just about it. This isn't just about getting an insurance policy. This is about transforming the way that money flows through our life. And Nelson says this at the very end. If we don't grasp this, we're missing the entire point of IBC, the infinite banking concept. This is about controlling the banking function in our life. Everything flows from that. That's the key piece. Controlling the banking function in our life.
Nelson said some version of this. When you control the banking function, you control the outcome. And so oftentimes people say, well, what's the risk of doing something like that? It's your human behavior. That's the risk.
Yeah, Nate. So if anybody's listening to this and you go, man, that's intriguing, or I had some understandings that were half truths about whole life, we're going to do what we tell everybody to do. Go to our website, cashflowlegendswithaz.com, get access to anything that we do, read Becoming Your Own Banker. And here's the cool part. What you do with that is completely in your hands. Just like Nate and I, when Nate read it 8 years ago, we still had the choice to go, is this worth exploring? And we started doing our own due diligence and looking and listening and learning. We may not be a best fit for you, but there are people out there who we believe and trust that understand Nelson's principles. So think about this. Here's your homework for today. How much money is leaving your life monthly? Whose passive income is that? And how much of that would you like to start making your own passive income that's coming back into your life that you control to reuse again? If you like sending thousands of dollars out a month to give to somebody else, then keep doing it. But if not, starting with Nelson's book and being sure we understand the problem will allow us to get clear on what the solution is. Nate, appreciate you today. Hope that was a blessing to everybody. We are so grateful that you spend time with us, that you give us insight, that we get a lot of feedback behind the scenes that might not even come up on the comments from people in our community and outside. We do not take that lightly, and we appreciate you spending your most valuable resource of time with us today. Have a great day.